Hello everyone, welcome to this video tutorial. In today's tutorial, I'm going to introduce another two technical analysis indicators, RSD and RSM, supported by our application, Technical Analysis Tool. So the reason I put these two indicators in the same tutorial is because they are the same category of indicators. So because they are both of them are true relative strength comparison indicator, and also the calculation, they are related. Basically, the RSM is derived from the RSD. Very often you heard about people saying the security is outperform the overall market or underperform the overall market, etc. So these two indicators can tell you this type of information. So that's why these two indicators are very important. Very important. The RSD stands for the relative strength indicator Dorsey, and RSM stands for relative strength indicator Mansfield. All right, so this is naming pointed to original where they come from, but in this tutorial, I'm just name them as RSD and RSM. So I hope you guys are on the same page with me. When I say RSD, that's the Dorsey indicator, and RSM is Mansfield relative strength indicator. All right, so last thing I want to mention is don't get confused yourself by another indicator, which is RSI. That one is totally different type of indicator than these two. Okay, so that one we have another video to dedicate for the RSI indicator, but these two are true relative strength comparison indicators. Okay, let's go straight into the application. All right, I have already prepared the data here. I imported Australia share market data. Right now I'm opened the big four banks charts and also the financial sector indicator, sorry, the index, and also the all odds, which is all Australia shares index. So this two is nothing different with Dow Jones or S&P 500, you know. So that's just our local market. We have the indicators for all Australia shares, and then here it's just simply the financial sector. So this for big four banks, they are under XFJ, so that's financial sector. Okay. The first thing I want to show you guys is just how to bring these two indicators into the chart. All right, so as the example, if I want to compare the Westpac banking with the overall XAO, I'll see if this banking share is at the moment is underperform or outperform the market. What I'm gonna do, so first of all, let me just bring up the RSD. Click that drop down list, point out to the RSD. So that's relative strength Dorsey. If you click on that, there's a little bit different than other indicators. So this one requires you input, you know, because you want to compare the Westpac with XAO. So here is where you put XAO here. So you tell the indicators what you want to compare with. Okay, so you put it here and you select data. As you can see here, this is the RSD is drawn and added to your chart. Very easy. Okay, so and then the same thing if I want to do RSM, the Mansfield comparison, the same thing. I click on the RSM, and also in here I have to type in XAO. That's the all odds index. Select data. So as you can see, the Mansfield is also added to your chart. Okay. Before we start with anything, let me just go through the simple configurations of these two indicators. As you can see here, we have RSD and RSM. If you expand the RSD, because here is clearly tell us we are comparing WBC versus XAO. Okay, so that's RSD. Very little we can configure. Basically, we can configure the line join width and the line color, and also the dash offset. Okay, so that's all. Cool. So that's very simple. The Dorsey RSD is actually a chart, a line chart, right? It starts from 0 to somehow. It depends on the underlying data. But as you can see, the second one, if you want to configure the RSM, you have a line width you can configure as well, and also we have an option to let people to specify the chart, the line chart, the line color, and the next one is the offset. That's the same thing. And there's one more is the average on. So because that one is 52 as a default, there's another one is the fill path. If you fill path, as you can see, the RSM has become a area chart. It's easy for us to identify the outperform or underperform. So there are different colors here. So if it's green, which means above the 0 line, so that's the outperform. And if it's red and below the 0 line, means it's underperform. The underperform with the market. Okay, so now let me just quickly go through the calculation of these two indicators. Very easy. All you need to know is how they get calculated. Basically, the relative strength Dorsey actually is just using the today's closing price divided by the market index number, also its closing number, and then you multiply it with 100, so you get a number. That's all. So each day's closing, we apply this algorithm, we get this comparison, because if its stock is outperformed, so that means you would see a uptrend for this line chart. But if it's underperformed, as you can see, the line chart is a downtrend line chart. So actually the numbers for RSD particular is not very important. The most valuable information we can get from the RSD indicator is the trend. Okay, so remember that. And the RSM is taking things a little bit further, because it's trying to smooth out the RSD value by applying a moving average. So we're using the average units specified here to reform, to recalculate the RSD, and then we did some formula functions there to put that number divided to the numbers into two categories. The first one, if the securities outperform the market, it will go in uptrend, but also it will stays above 0. So as you can see, the Mansfield has a 0 here to the user, who can easily identify the relative strength. Okay, so that's it. Basically, what I'm explaining is how to get the information from the indicators. I think so, because the Mansfield use much often than the RSD, and it also is much easier to use. So from now on, the tutorial, I'm gonna focus on the RSM. Yeah, but meanwhile, I'm gonna open the RSD as well. So just in case, sometimes I explain things in RSD. So basically, RSD trend means the comparable strength. If it's a downtrend line chart in RSD, that means that security is underperform the market. If it's uptrend, moving up, very easy. So your security is outperforming. It's improving the performance compared to the market. So most of the time, people are trying to. So we can use this trend line. You can draw a trend line, just treat this RSD as a normal share, a line chart. So you can draw the trend line. You can do the resistance and the support. You can apply all this kind of analysis on RSD. But RSM is, if the securities outperform the market, it will stay above the zero. The more it stays, if its number is far away from the zero, means your security is very strong and outperform the market by a lot, right? So, but if it's way below the zero, means your shares right now is underperform the market. With the market, it's very, very bearish. It's greatly underperform the market. So that's all. And also, if you can see your RSM, if you take this back to a line chart, and also you can do the trend analysis on the RSM line as well. If you see your RSM reading is going from the very bearish and across the zero line, and it's an uptrend, so which means your security is improving the performance with the underlying market. Okay, so that's all. The greater it's away from the zero, the more better the security is performing. Cool. I think that's all the basic information for these two indicators. And let's bring up the okay, so at the moment, as you can see, WBC is underperform the market, all right, compared to the all odds. Let's have a look the NAB. For example, let's bring up the XAO, RSD. Okay, so you have to compare with this thing. Let's take out the RSM as well. Okay, so you can see the RSM. So the NAB, another bank, so National Australia Bank, actually because it's green and it has some distance from zero, which means right now NAB is outperforming the market. Of course, it will outperform with WBC. Okay, so let's see the NZ. For example, let me just compare NZ with the XAO as well. Let's bring up the RSM. Okay, this one is slightly different. As you can see, this one stays above the zero, but very close to zero. So pretty much it's just behave the same as the market. It's not this bank NZ doesn't outperform the market too much like NAB, because NAB have some gap. See, and it's also point out, which means it is improving further maybe. So as you can see, by simply looking at the RSM and RSM especially, you can clearly see which stock is stronger at the moment. Also, you can compare the share with another share. Of course, nothing stops you from doing that. For example, the Commonwealth Bank is the biggest bank in Australia. You want to compare this one. Let's just bring up the RSM. Let's compare this one with the financial sector index. As you can see, this stock is well outperformed with the banking sector, and also you can let's just close one. And also you can compare the share with another share. For example, you want to compare the Commonwealth Bank with NZ. You just type in NZ here, select data. So as you can see, the RSM, we compare the Commonwealth Bank with NZ. You can read from here CBA versus ANZ. If you can see the Mansfield indicator is well above the zero line, means your CBA is well outperformed with the ANZ. So if you want to choose which one you want to buy, if you want to choose stronger one, you obviously want to pick up the CBA. So yep, so that's the one usage part of this indicator. Cool. Let's some little practical analysis here. Let's close all. All right. So in your local market, for example, if you are in the States or somewhere, if it's a mature developed market, you have sort of information you can get from the internet to tells your local market sectors and what's the behavior. For example, here is the marketindex.com.au is our Australian share market and index indices information. So for example, for the past year, the best performed index is the merging companies. The top one is that one. The second one, the top two is the XBK, the bankings, and the third one is XFJ. Because the top one and top two are new indices, so we don't have that full range of data. But basically, as you can see, yearly, those are best performing indexes. Okay, so but you want to see the worst one for the past year, but right now the time I'm recording this tutorial is 2021, November 12th. Past year the worst sector is the all ordinaries gold miners sector. That's surprising, so they're the worst sector. Okay, so as you can see in here, the weekly best performed sector is ordinary gold, the gold miners. As you can see, the monthly best performer also is the XGD, is the gold miner companies. That's very interesting information. For example, you can get it from this data is the gold miners companies, the worst behavior index for the past year, but for recent week and month it becomes the top performer. So it might indicate some of the the trend is reversal. Maybe the XGD could be the best performer next year, who knows? So basically you can get this sort of information from those source. Okay, just do some of the practical analysis here. Is if the gold miner sector in Australia the worst, it did their worst performers last year, but now it's the best performer. Let's pick up some of the shares in this sector and see which one we want to buy. For example, I want to buy a company from the XGD sector. How I'm gonna find the shares? For example, I know a couple of them, so candidates here. For example, the new Crest is the one. Okay, the new Crest looks like that, and also the Evolution. Okay, so SPM is St. Barbara gold miner. Okay, it doesn't look good. Let's close that one, and Revolution. And there is a GR, which is a very good one. Because I'm in the local market, so of course I know those candidates. I want to buy some. For example, this is old gold mining companies, because recently they become the top performer, but the past year is the worst one, so I expect a turnaround. So yeah, when you want to pick up the share from those 4 candidates, for example, what I can do is I can apply the RSM comparison. I can compare it with the strongest performer, which is XFJ past year. It's financial sector, right? So they are the best performers, the best sectors for the past year, and I'm comparing these shares with this best performance index. So as you can see, this is called Purser's Manning. Actually, very interesting. It's weekly outperform with the best sector, but this one is from the worst um, industry, which is gold miners, right? So as you can see, that's the worst one. So I can compare it. I would do the same because if you want to compare it, you need to find the same comparator. Let's compare all of them with XFJ, which is the financial sector. Um, yeah, interesting. GRO is starting to turn around. You can't see from the area, but if you see from this line chart of the RSM, as you can see, it's cross or above the zero line. So for the recent, it's for the this week, it starts to outperform the best sector. Oh, hey, that's a good sign. Let's compare this EVN. You can do the same, typing XFJ. As you can see, it stays below this zero line, which means the RSM for this particular share still underperform to the last one. So yeah, as you can see, if you want to quickly pick up the share is underperform using RSM. Don't using the RSD because you can't read those numbers, doesn't tell you much. Cool. So this one is well underperform. From this comparison, I can see NCM. No, I don't want it because still underperform. The best sector, EVN, still underperform. GOR is improving, and also looks like it's forming a pattern down here about. So that's the best candidate. No, it's not the best candidate, but it's a good candidate though. And the last one is the this one, the purchase mining. That is really good because it's already moved a little bit away from zero. So as you can see, what I've done for the past 10 minutes is just go through a sector comparison analysis to help me pick up the best candidate from the sector that I want to buy. So basically, you guys can use this, can apply the same the method to get the stocks that you want to buy and put in the watch list. Cool. Let me pause the tutorial here and move into the second part. Okay, let's move into the second part of this tutorial. In the first part, we just give you guys the basic introduction how to read the information from these two indicators, how to use these two indicators to get information of the relative strength. In this part, I'm gonna focus on the technical analysis part, and then to show you guys how can we use these two indicators to help us to predict a consolidation breakout or down is valid or not. So it's kind of can give us some extra bit of information when we're doing that technical analysis. Okay, let's just open the first chart. So this is our Rio Tinto mining. For example, I already applied the RSD and the RSM indicators using default values here. As you can see, from now on, the Rio Tinto running a downtrend, and then it stops to forming a bottom pattern here. So you can see this rectangle here, the green color rectangle here. So that means the consolidation is forming before it breaks out. As you can see, you can also use the RSM to tell us some extra information. So basically, from this point to today to here, you can see the RSM is improving because it's from this great area of a red approaching to zero, and then now it's crossing above. So right now, during this consolidation, RSM tells us this stock actually now is outperforming the market. Okay, so once you see this breaks out from here, so before it breaks out, you can just the RSM tells you this might have a successful break up, right? Because right now it's greatly, not greatly, it's it's notably outperform the market. Once it breaks out, as you can see, the point it breaks up from this rectangle area. Um, Also, it is outperform the market. So in if you see this kind of combination, you might be more confident about this breakout can be last a longer because it breaks out when it's obviously outperform the market. All right. So that's the first usage. Basically, pick up the consolidation areas and open the RSM and observe the RSM trend. It's an uptrend as well. Okay. Breakpoint, breakout timing has to be when the shares break out from the area. It must be, I mean, it's preferably the RSM is outperform the market, and then it will be have more confidence. So this breakout could be a valid one. Let's move on to the next one. For example, here's another example. So in here, it runs into the consolidation areas, as actually can extend from here as well. So basically, in this trading range, before it breaks out, as you can see, the most of the time, this particular security share is always outperform the market. Okay, it's outperform the overall market. When it actually breaks out here, you can see the RSM well above 0. So this breakout could be valid again. Let's see. Yes, it is. You can, if you bought from here, you have a decent profit. So yeah, so RSM, if it at the time when it breaks out, if the RSM stays well above 0, you have more confidence with this breakout. Okay, let's moving on. Well, this shares right now is forming another pattern. So this time, let's just see what happened. So up to here, we are still very confident because it's above the 0, outperform the market, but it's quickly this couple of weeks and quickly approaching to 0 and then breaks down to 0, and this breakup might not be happening. I mean, we can just predict it, but we're not sure. As you can see, when the time goes by, surprisingly, this shares breaks up. So this time is different than the previous times. When the time breaks out, first of all, the point they break out, it has some range between the top of this rectangle, so it breaks out from some distance. But this one, it breaks out. It says this security is slowly approaching to the resistance level. Okay, so same here. But this one is just jump directly from here, and that's difference. The second difference is this time breaks out actually before that long up week. The RSM is still in the negative, so it doesn't break out from the area that's well above 0. So that's another sign. So from what I'm saying is, be careful when this happens, because we want to see that breakout be well above 0. Another difference, the last difference is this trending range is well wider than the previous one. Doesn't look like a consolidation, but it looks like a distribution. But anyway, it breaks out. Right? Okay, let's see what happened. If you see this kind of breakout, you probably can stay away from it a bit because you're not confident with it. As you can see, when the time goes by, a couple of weeks later, this shape becomes like this because it does break out. As you can see, if you see this RSD, it doesn't create a higher high, which means a divergence happens, the RSD. When the share price moving higher, RSD stay flat, and also when the share price create a higher high, RSM is most of the time in red. That's weird. Why? Because your breakout, right? And then after you breakout, you does create a higher high, but you underperform the market. So all of these are warning signals. As you can see, it falls back to that rectangle again. As you can see now, RSM shows big area in red up to today. It's very bearish, so actually it becomes a bull trap for this many weeks. Okay, so this is the first chart and tells us how to predict, how to use the RSM as the actual information to examine a breakout. Let's quickly try another one. So as you can see here, this is the Treasury wine estate stock in Australia. So Australia is famous of the winery industry, so this is a big one. As you can see here, I have already put those arcs in the chart. It indicates this probably a classic head and shoulders pattern, right? Actually, this is a gap down, so I have a resistance line here. This is the bottom of this gap, so another resistance line here. Usually when you're talking about resistance or support, we're talking about the support area instead of a line. Also for the resistance, most of the time it's not a precisely a single price. It could be a very narrow range. So from now on, so in our tutorial, when I'm talking about support and resistance, it's a support area and resistance area. So as you can see here, that's our resistance area. Head and shoulder patterns, I guess everybody already familiar with it. If it breaks out, that's a very good sign. So let's examine here. If you bring up the RSM indicator and RSD, let's see what happened is head and shoulders. As you can see, when the header happens, the shares actually is well underperforming the market. But from the header to the right shoulder, right? So actually the RSM greatly improved. Sometimes it even move above the zero. Okay, this time it breaks out a tiny bit above zero. So for next chart, I would say the breakout preferred to be when the time the share breakout for a significant trading pattern. RSM preferably stay above the zero, but this time doesn't. But it's not 100%. In technical analysis, so the shares are various different situation. Like this time, it doesn't create a big jump, but it moves into this resistance area. When time goes by, it doesn't break up this top level of the resistance because that's the gap happening. We really want to see the share price stands above that resistance, breaks that level. As you can see here, this share approaching closely to this above line. So it's trying to tamp, but it failed the first time. As you can see, now it breaks out finally. As you can see here, the RSM well outperformed market at the time when the share break out from that top level of the resistance area. Cool. So that indicates might be a very valid breakout. As you can see, once it breaks out, this shares moves nicely to form a very strong uptrend. That's our first example. Okay, so we have other type of indicators to monitor this trend, so I'm not going to put this information in this tutorial. You can go to the RSI or MACD or moving average, for example, those type of tutorial to see how we can observe monitoring this uptrend. Just quickly mentioned here, this first of all, RSD, while this uptrend is also creating an uptrend here, right? As you can see up to here, and also every time looks like the share never break below the 30 weeks moving average. So this is very important. If the share stays keep above the 30 weeks moving average and the moving higher, and you would be happy because that means the trend is intact and the uptrend still be strong. Okay, so most of the time when this RSM stays above the zero, yes, that also an indicator. Indicator means this uptrend is very strong. Okay, let's move into here. So once you can see this RSD stop to creating higher high, but price still for flattering, as you can see the flattering here. So when the TWE move into this level and it's the RSD flattering doesn't, and also the this RSM very important. When you see this RSM also moving close to zero, means it's the strength losing some strength to the end of this uptrend might be in question. So as you can see, the first part is very strong, it's well above zero, and then dips back, consolidate a bit, keep moving higher, but oops. I need to bring up my okay, let's moving on. So as you can see this, and also you can apply a trend line to protect your profit. Once it's the RSD flattering, so it doesn't break down immediately, and then it creates another top, and again, so this time, and you can see the RSD doesn't create a high, and here the RSM also tells you a divergence here. Then I'm just gonna draw it out. For example, this top from here to here is relatively same level, yes, but actually RSM tells you divergence, and also RSD further indicates the RSD. Actually, you can draw the support as well on RSD, as I just mentioned. As you can see, when the RSD breaks down, that's a big fall happening. So as you can see, the RSD relative strength indicator can also tells you something before it breaks down, but some people prefer, you probably can bring up another type of RS indicator to help us to observe this double top pattern. For example, now I'm bring out RSI. In the previous tutorial, I also tells you to observe the RSI indicator divergence. Basically, as you can see here, this double top pattern is a classic top down as RSI shows in a bearish divergence. Price almost the same, but RSI doesn't create a high divergence of the relative strength Mansfield. So this is not outperform the market too much, because if you want to keep moving higher, we are expecting the RSM keep moving stronger. Same behavior like the RSD, so it doesn't create a high, because if you really want to break above the previous high, you expecting the RSD creating high as well, but it doesn't. Okay, the final one is, let's close this two, close this one. Let's bring up MACD. Where is MACD? Yep, this is MACD. Okay, so MACD, as we can see, the MACD actually also have a divergence, but not very obvious as RSI. But yes, when you see those many divergences happening, and relative strength indicator also tells you this share doesn't outperform the market too much, and it's weakening, so you have enough information to confirm there might be a double top, and once it breaks this resistance line, support line directly, it's when it breaks down here, and that's confirmed that double top pattern. Once it happens, as you can see, yeah, it doesn't perform quite well up to today. All right, let's close this one. Let's move on to the last one. This one is very difficult, but I'll show you how the RSM, RSM and RSD can help us for the technical analysis. As you can see, this particular stock actually moving up strongly for the past year, but once it starts to moving into this wild trade range, as you can see here, you can draw the trend on RSD, which means yes, let's just observe what happened here. So first time when it's created first peak, so the RSM shows the green area is well above the zero, which means this A2 milk stock is well outperform the market. And when the second time it creates the second high here, it doesn't outperform the market by too much, especially the last time. The last time actually had a divergence from the RSI as well, as you can see here, and also the price carried a higher high. RSI is divergence. RSM doesn't appear too much strength. Instead, it's closing back to zero range and finally breaks down out of this pattern, right? Once it breaks down, that's very bearish, and as you can see, the shares moving to very low level. Let's just say, let's close that one and get rid of this too. Yeah, so if you draw when this RSD is moving above, so as you can see, when it breaks down from here, RSD trend line, the same time, pretty much the same time. It's about this one, I think. So gonna be careful. So relative strength indicators can give you some pre-warning. Also, you can use another indicator as well, and you combine all these information together to improve your technical analysis process, right? Skills. So as I always said, when we go into the technical analysis, those indicators are so indicators are the helpers. So for our first focuses will be always on the chart itself and the volume as well. Yep. So I think that's pretty much all the information about these two indicators that I want to show you guys in this tutorial. Along with this tutorial, I also apply a lot of the technical analysis during this tutorial, and so always focus on the chart, always focus on the price and patterns on the chart, using indicators as actual information to confirm some of these your judgment. So okay, so that's the way we're doing the technical analysis. Let me just go through some of the highlights of this ones. Yeah, okay, let me just close that one. The last bit I want to show you guys is that you can create a filter. Actually, you can create a filter and ask this application to give you all the shares that outperform the best sector. You can actually do this. For example, here is I want to say, RSM outperform the XEC. Well, that's the sector leader, so you can create a condition like this. So basically you want to see the RSM, remember that value is larger than zero. Larger than zero means that RSM line is above the zero line. So I wanted all these shares compared to the strongest sector outperform the strongest sector. So I want to have a look what are shares in the current market. So actually you can create a filter like this. So that's just a little bit extra information. Okay, I think that's pretty much all for this tutorial. If I have think of more usage of this indicator, I will create more tutorials. But thanks for you guys stay with me for already almost 45 minutes. Okay, thanks for your time. Thanks for watching, and see you guys in the next tutorial.